Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hope everybody had a very good day of trading today. And in today's markets, guys, well, the SPY and the QQQ did end up red, killing a little bit of the positive momentum that we had yesterday. However, it was not as bad as it seems at a first glance. Yes, a lot of the big tech names were down today, led mostly to the downside by Apple. However, the broader market was very good. We had some rotation coming in financials, in healthcare, semiconductors doing well after TSMC earnings, and the bottom half of the market, guys, utilities, real estate, and others did perform quite well. I know that a day when big tech is down does feel like a down day in the market, but if you focus on rotation, it was actually quite a decent day, all things being considered. So in today's video, guys, we're going to take a look at a few key things together. Number one, we're going to be going over a brief look into the retail sales data that came in this morning, which was fairly good for the markets. Thereafter, we're going to take a look at two earnings reports that I have prepared for you guys, and those are going to be TSMC, Taiwan Semiconductors, take a look at their earnings, and thereafter we're going to take a look at United Healthcare, UNH. Couple key different sectors here, but it's going to be very important to take a look at what each of these companies are saying. Bank of America and Morgan Stanley did have very decent earnings, and we're up on the day, but we will be covering them tomorrow. So I'll kind of do two per day for now. So Bank of America and Morgan Stanley, probably tomorrow after the close. Once we're done with those earnings, we'll take a look at our major technical analysis rundown in terms of our major market indexes, check on the rotation, check on the market breadth, see how we're doing, even though the SPY and the QQQ were down today. And thereafter, take a look at some of our big tech names and see whether there's some possible trade opportunities there. Now that big tech has largely been moving down over the past week, could be freeing up some interesting level on a few key names. And that's pretty much going to be it for today, guys. No portfolio review. I will save that for tomorrow. As per usual, we usually do it Monday and Tuesday, and then a big recap on the Friday session. So today's video should be a little bit shorter than usual. Let's jump right into the action, shall we? So the SPY down about 0.19, the QQQ is down about 0.7, but look at this decent rotation across the board here towards the bottom half. You can see that best expressed on the heat map. Yes, Tesla and Apple were down close to 4%, NVIDIA also coming down about 2%, big tech just not having a good overall day. However, the outperformance came from the entire rest of the market, and that is exactly what you want to see. When big tech is having a little bit of a down day, keep in mind, they really carried the market through end of November into December. Normal for them to take a little bit of a breather, right? Now, that being said, very healthy rotation across the bottom half, guys. Pretty much every other sector than big tech did have some decent performance today. You can see that best on the one-day relative as well, where everything was green except for some consumer cyclical names, technology, and communication services. I'll remind you, communication services is largely just Google and Meta at this point. So overall, not as bad as a day as it may seem if you're just looking at the percentage declines on the SPY and on the QQQs. Where do we stand on the 1 week relative performance? Well, arguably the same. Technology, consumer defensives, and communication services a little bit on the weak side, but the bottom half of the market is truly coming back in a decent fashion. We've been missing the participation of the bottom half of the market, guys, largely since the early portion of December, when a lot of the value names embarked on one of their worst declining cycles since the 1970s. You guys remember those headlines, right? Dow Jones, worst performance, 10, 12-day performance since the 1970s. So now we are recapturing a little bit of those levels. Nice to see the bottom half of the market performing a little bit as they bring in more and more rotation. Now, in terms of what we had for the press releases for macro data, we had retail sales this morning. Now, the expectation was for 0.6 month over month, and it came in slightly under the expectation at 0.4. So a little bit of a weaker read. Now, this is okay for the economy, but number one, it is definitely good for the inflation narrative, right? You don't want to see any blow-off retail sales reports because although they may seem good at a first glance and show the consumer is healthy, well, it kind of works against the inflation narrative, right? But the context of this report matters a lot. Take a look at this retail sales number. Here's your 0.4, and you can see in terms of historical averages, guys, this is literally where we are. 0.4 is a very average number if you were to go back all the way 20 years roughly. So at 0.4, guys, not the worst read at all. Historical averages, yes. It's really a kind of a Goldilocks thing, right? Where it's not too hot, not too weak, but just right there in the middle. So overall, not that bad of a report, even though it may seem weaker than expected. It is well within the historical averages. That will pretty much wrap it up for the macro events of the week. Next week, we do obviously have a holiday on Monday, Martin Luther King Day. The markets will be closed, but at that same time, we do get Trump's inauguration and could see some volatility in terms of his policies that he will put forth in terms of the early portion of the week. So very curious to see what those can possibly be. That'll pretty much wrap it up, guys. No macro for tomorrow. So now let us dive right into those earnings, shall we? And we're going to start off with a good one, which is going to be TSMC. So TSM coming up 3.86% today. At one point today, they were up over 7.5% before giving a little bit of that back throughout the day. Just some profit-taking consolidation. But overall, guys, these earnings were absolutely fantastic. Yes, they missed a tiny little bit on EPS by 0.5%, but revenue had a slight little beat as well. But the kicker was really in the guidance. And the last 2 quarters, I'll remind you of the context. The last 2 quarters, TSMC has been saying we cannot keep up with demand. Demand for our AI chip segment is absolutely flying. And today we were trying to determine whether or not that would still be the case or whether they would pull back on that very bullish guidance. Well, I'm happy to say, guys, they reiterated their guidance and should be growing revenue. Listen to this. 25% growth in revenue for 2025 and 20% for the 2 and 3 years following that. So the AI boom is definitely not done. Let us dive into some of the numbers, guys, because they were very fantastic. So TSMC net profit hits record highs as fourth quarter results top expectations on robust AI chip demand. All in all, guys, you would be very hard-pressed to find anything negative in this earnings report at all. Increasing revenue substantially, increasing EPS year over year substantially, and gross and net margins have been increased as well, and a nice little bump to free cash flow. All in all, guys, and guidance was strong. A stellar report. Now, moving on further, demand for advanced chips used in AI applications continued to surge. Profit rose 57% from a year earlier to a record high, while revenue jumped 38.8%. What they mean by record profits, guys, 43.1% net margins in Q4. That is the best ever number by TSMC. Take a look right across my shoulder there. You will see that the profit margin history of the company has been really increasing at least over the last 5 years. And so, although on a yearly basis, it's not the highest ever, on a quarterly basis, it's not here yet, but 43.1 is the highest net margins ever. And keep in mind, this is not a software company, guys. This is a company that manufactures products. Usually you do not see net margins that high. So TSMC once again outperforming the rest of industry peers. Moving on further, the surging demand for AI chips has exceeded expectations in Q4. Revenue was also bolstered by demand for the advanced chips in Apple's latest iPhone 16 model. Now, record-breaking year in sales to this year since the company went public in 1994. That is absolutely fantastic, guys. We have nothing but good things in this report, as I said prior. We observed robust AI-related demand from our customers throughout 2024. Even after more than tripling in 2024, we forecast our revenue from AI accelerators to double in 2025 as a strong surge in AI-related demand continues as a key enabler of AI applications. So I guess big tech is still going to spend a lot of money over the next year, possibly even 2 years, on the infrastructure build-out for those AI applications. TSMC may face some headwinds in 2025 from US restrictions on advanced semiconductor shipments to China and uncertainty surrounding the trade policy of President-elect Donald Trump. Now, of course, they do have a very large manufacturing facility coming online in Arizona, possibly over the next year and a half. So far, no defined timeline as to the finalized date for the factory opening, but it's nice to see them diversify away from having a facility, all their facilities pretty much in Asia, to now having one right home here in North America, in the beautiful state of Arizona. But of course, the entire semiconductor industry, we know that the headwinds are all about these China restrictions. That has been the case for the last 2 years. Moving on further, 2025 will be another strong year. This is the guidance from the CFO, by the way. Another strong year for TSMC, with significant revenue growth fueled by strong and expanding demand for AI applications, both in diversity and volume. And I will remind you guys that TSMC has the best technology in the entire industry. This is the percentage of revenue by their various technologies. So you'll see 7 nanometer, 5 nanometer, 3 nanometer. All you need to know, guys, is the technology is getting smaller and smaller, right? And the smaller the nanometer count, of course, in terms of the measurements, the better the chip, arguably, right? So now you can see that their legacy chips, the 7 nanometers, are representing fewer and fewer amounts of the overall revenue. Last generation's 5 nanometers right now, about 34%, but they as well, although they've been popular, they will eventually be phased out in favor of the new 3 nanometer chips. Nobody else makes the chips as reliable and as fast as TSM does, and at the accuracy that they are making them at the 3 nanometer size. So very healthy boost by TSMC right there. And take a look at these corporate profits, guys. Gross margin, 59%. That is better than last quarter and definitely better than a year ago by 6 percentage points as a whole. Operating margin at 49 is better than the last quarter and better almost a full 7+%, 8% almost, than the quarter that they had just fourth quarter of 2023. And in terms of net profit margins, there it is, the big one, 43.1. It beat the last quarter, which was also a record at 42.8, and much better as well by about 5 percentage points. That is huge margin improvements, guys, over the fourth quarter of 2023. So everything working really well for the company, guys. 36% return on equity this company delivers. That is absolutely fantastic. As I said, you would be hard-pressed to pick apart any negativity in this company's earnings report. The guidance was good. The free cash flow was good. The net margins are expanding. And revenue guidance as well is absolutely fantastic. So let's go over some of the valuation here. Revenue growth for the next 3 years is going to be on average roughly 20% per year. EPS growth about 19%. This is fantastic growth for the company, guys. In terms of the forward guidance at our forward valuation at 215, 23.67 PE ratio, guys. That is very, very cheap for a company that is growing this aggressively. That is, for all intents and purposes, the industry leader, and by a wide margin. This is very, very cheap, even at the all-time highs. And at 215, when we divide this PE ratio by their EPS growth rate, the PEG is a very cool 1.25. As I said, this is very cheap for the company. Free cash flow yield at 3.3% is very good as well. I do like the valuation on TSMC, guys. Take a look at the analyst price targets for this stock. Median or average price target is about 245, 250, and I would not be surprised if the stock is able to hit those targets throughout the year of 2025. Looking very good on the technicals, guys. Well, we just broke out of the all-time high range. Of course, we tried that once in the past, a few short weeks ago. Now let's hope with the earnings it actually sticks. You're looking for the breakout, the retest, and the run. If we do get the retest, guys, it may be a decent opportunity for myself to position for the foreseeable future. Look at this weekly uptrend is absolutely stellar, guys. Very, very, very nice. Riding the 12 EMA. We are not extremely far extended from it to where we could be warranting a pullback. This is really just a very stable chart. Nothing is overbought conditions at all. So this is a very nice buying opportunity for myself, because none of this is financial advice for you guys, of course, but I will be highly interested in picking up some TSMC for this ramp throughout 2025. And that is your earnings summary. Hopefully you guys appreciated that. Now, earnings summary number 2, we're going to dive into UNH. UNH on the flip side here, down about 6% because of rising medical costs. And we've been doing these earnings on this company now for approximately the past year, year and a half, every time they have earnings. And they've been really stuck in this kind of sideways range for all intents and purposes since February of 2022. They've been stuck here for almost 3 years. However, have they been improving fundamentals during that time period? Yes. Why are they down recently in this most recent period? Well, of course, unfortunate event with the CEO and assassination back in the early stages of the month of December. But more than that, guys, it has to do with some of the headwinds that I had written down, last quarter and the quarter prior. Medicare and Medicaid spending from the government to these companies, because these companies are subsidized to a certain extent, and rising cost of medical services. Why is the rising cost of medical services a problem? Well, because these insurance companies, usually they will increase insurance premiums once per year. But if progressively throughout the year, the cost of medical services rise and they're only collecting a flat amount of premium, well, you're getting squeezed in the margins, right? The cost of medical care is rising. People are only paying the locked-in amount of insurance premium that they locked in for 1, 2, possibly 5 years, depending on how the plans work, right? And so they're getting progressively squeezed in the margins. and that is why the stock responded in the way it did today, down about 6%. So let's take a look at some of the numbers, shall we? Beat on EPS by 1%, that is good, but a slight miss on revenue by about 0.78%, so it kind of counterbalances itself. But all in all, guys, UNH is looking pretty good in terms of valuation, and we're going to get into that in a little bit. Let's take a look at this. So United Health quarterly revenue misses on weakness in the insurance unit. Let's have a look, shall we? Misses the Wall Street estimates on weakness in health insurance business, and the company also reported higher than expected annual medical costs. Now, United Health's annual medical cost ratio, the percentage of premiums spent on medical care, rose to 85.5% compared with 83.2% in 2023. So getting squeezed in the margins, guys, right? They cannot pass everything along to the consumer immediately. They have to wait. And then in the interim, they do get squeezed in the margins. Analysts were expecting a ratio of just under 85%. So companies typically aim for a ratio close to around 80%, but the industry has been grappling with increased costs for nearly 2 years due to high demand for healthcare services under government-backed Medicare plans for older adults. United Health has encountered a series of challenges throughout 2024, including a cyber attack on its tech division and a persistent increase in medical costs. And I would add to that the assassination of their CEO. Very unfortunate event, of course, which kind of put some timidness around the stock as a whole. Now, they reported revenue for premiums of $76.48 billion for the fourth quarter, compared with estimates of $78.06. So at least they did beat in terms of revenue on premiums. But as I said, the problem is they're getting a little bit squeezed on the margins because of those rising medical costs. Revenue at its Optum healthcare unit, services unit, which includes the pharmacy benefit business, Optum Rx, rose 9%. This is one of the more profitable divisions of United Health. If you don't know, they have United Health Division and Optum. What is Optum? Optum is like a full service, you can check on their website, right? It's kind of like a full service portal for planning medical consultations. Thereafter, when you do have a consultation and you have a medical procedure, or you have to have some possible ongoing, pharmaceutical pills or stuff like that. It's kind of like a portal where everything there is combined. They combine a number of different healthcare services, financial planning for it you can load up your insurance here through your employer and stuff like that. And they have a pharmacy division as well. They acquired this business a few years ago, and so far it has been a very good acquisition for the company. So that's what they talk about when they're mentioning Optum. The company reaffirmed its 2025 adjusted profit forecast of $29.5 to $30 per share that it had initially provided in December. So seemingly, guys, they will be able to pump up that EPS. Lord knows if it's going to be due to buybacks or actually margin re-expansion, but at least they were able to reaffirm the profit guidance, right? So moving on further, guys, in terms of what they had, 8% year over year in revenue growth. That's very good, guys. United Health, I'll remind you, they are the largest healthcare provider in the entire United States. They are the industry leader, and it's not even close at this point. And they do not also have to offer any incentives as their competition does. So even though they're getting squeezed in the margins, they're not getting squeezed as nearly enough as the relevant competitors, right? Take a look at some of the competitors, and their stock prices are not doing well at all. Take a look at Elevance. There is Elevance. They are down from the top to the bottom, 33%. If you take a look at some of the other ones, one of them that I wanted to look at here was Humana, right? You guys know about Humana. Take a look at Humana. From their highs, same rising medical costs, down 50%. UNH, if it wasn't because of what happened with their CEO, resulting in this massive sell-off for 3 weeks, guys, arguably they would be anywhere between 10 to 13% from the all-time highs. So they're weathering the storm better than most. They have a lot more cushion than the other companies. That being said, they are still being slightly affected. Domestic consumers grew by 2.1 million, which is very good. Value-based care patients served by Optum grew to 600,000. The total amount of clients under Optum, guys, is over 100 million. It's like 102, 103 million, which is fantastic. And as I said, they reaffirmed their performance outlook as a whole. But here's the squeeze in margins, guys. 3 months ended, doesn't look so bad, 5.5%, but look at the year ended margins here, 2024, 3.6%. Usually the company has always delivered roughly about 6% net margins. If you look over my shoulder right there, you will see that even better. The last couple of years, guys, always roughly between 5 to 6% in terms of net margins, right? They've been fairly consistent, but this has been a rough year for United Health, to say the least. That being said, their most profitable division, if you guys want to see, is indeed Optum. Take a look at operating margins, United Healthcare division. You'll see that the operating margins are about mid fives, but the Optum is well, not significantly higher, but it is the most profitable division of the company. So nice to see that this division has been growing very, very, very well. 12% revenue year-over-year growth, which is very good, led by OptumRx and Optum Health. Very solid, guys. Nothing bad to say really about this earnings season on United Healthcare, except for the fact that they've been dealing with the same problems that they've been dealing with for the last 2 years. So it is not new news. They are still the same headwinds. And of course, when the Trump administration comes into office, there's a little bit of uncertainty surrounding what does he want to do with Medicare and Medicaid. Now, he wanted to kind of redo those plans from 2016 to 2020, but he never really got it done because it's a very complex topic, and Donald Trump has admitted to this himself while he was running during his campaigns for this presidential election cycle. They've asked him, pretty much straight up, what do you plan to do? You don't like Medicare and Medicaid, but what do you propose as an alternative? And he literally said, I don't know, I'm gonna have to put some pretty good people on it, and we're gonna have to figure it out. So as of right now, there's no concrete plans. So in the first weeks of Trump's administration, I'm not expecting any big changes on Medicare and Medicaid, but it could be something that we have to look forward to in terms of 2025. Now, in terms of where the company sits in terms of valuation, guys, the valuation is getting very, very, very attractive. And also the technicals are not looking too bad either. So revenue growth of 7.1% per year, that's good. That's better than the industry. EPS growth of 14% per year. That is very, very, very solid for the company. I mean, in terms of fundamentals, guys, this stock is just super solid. It just prints EPS gains every single year, prints revenue gains every single year. Very consistent business, usually with consistent net margins, other than being in an environment where rising medical costs because of inflation in the last 2 years have been going up. And now we saw CPI yesterday. Medical costs are actually trending down over time, although they are a little bit sticky right now. This is kind of like a speed bump for a company. I don't think it's a long-term problem for the company, maybe just a speed bump. But look at the analyst price targets, guys. Midpoint is 642, and arguably everybody here on the analysts are bullish on the stock. Take a look at the valuation. At 511, where we stand now, 17.1 forward PE. That is very cheap, guys. The historical average is 21. And take a look at the PEG. When you divide the PE ratio by the EPS growth rate, sitting at a 1.22 PEG. That is very, very good as well. Quite cheap, if I do say so myself. Forward price to sales, 1.07. That as well is cheap. But then again, healthcare does trade around 1.5 price to sales, but you do want to see it towards the bottom end of the range, right? And free cash flow yield at about 2.47%. It is at the bottom end of the range, which is not the best. You'd like to see this above 3.5, 4%. But all in all, not that bad at 2.5%, guys. A lot of very solid companies trade between 2.5 and 3.5%. So it's the bottom end of the range, but nevertheless, quite good. So the valuation, guys, very, very, very attractive. I would say that this is arguably one of my favorite plays in the healthcare sector as a whole. And if we somehow make our way back to these big support level, 487 down to 450, I will do the exact same thing that I did here, which is buy the dip and sell on the rips, right? So very interesting trade setup, but also for a long-term portfolio, guys. I don't personally hold any healthcare companies as a whole, but I see nothing wrong with this position for a long-term hold. In terms of the fundamentals, in terms of the moat and competitive advantage of the company, and the 200 daily moving average is down here at 475. So I will be interested in playing this one if we do make our way back there. Very, very, very large range of accumulation. And at this current valuation, I think that would be an even better deal down there. If they drop another 10% somehow, the PEG would be actually very, very, very close to 1, which is kind of where I want to buy this company to begin with. So that is pretty much our take on United Health. Hopefully you guys enjoyed both of those earnings. Now let's get into some of the juicy stuff, shall we? And we're going to be taking a look at these indexes. So what exactly is happening with the SPY and the QQQ? So let's jump right into it. So in terms of the SPY, yes, we were a little bit red today, about 0.2%. But I mean, on a day, guys, where your largest holdings are down decently, right? Apple with a very rare 4% day, Tesla, Amazon, Google, Meta, NVIDIA down. The largest weights are down. Of course, the SPY is not going to have the best time, but we knew that to be expected, right? In terms of where we are, the context is still this daily downtrend. Lower high is possibly set at this point. Why? Well, because we are slightly losing the hourly uptrend. I wouldn't say we've convincingly lost it. That would be a break of 591. But if you lose this hourly trend into tomorrow, that is unfortunately the top of the daily bounce. Then it's up to the bulls to reset this into a daily uptrend. Good thing they have a lot of space, anything above 575, looking for a daily higher low for possible further trend, or rather trend reversal pattern back to the bulls. But we know that the bounces are just that until they are proved to be daily uptrend confirmations. We had a nice bounce here, rolled it over. Nice bounce here, rolled it over. Nice bounce here. Now question mark. Are we going to roll it back over, or are the bulls going to be able to support this? Now, of course, with the CPI data, with the economic data that we've gotten in terms of jobs and whatnot over the past week, it shows that the underlying economy is still very strong. Bank earnings largely showed that as well. And TSMC showed us today again that the AI trade is very alive and very well. We've heard that same thing from NVIDIA, of course, over the past month as I've held a few different conferences. That being said, guys, the trend is your friend. And as for now, the trend is still down until proven otherwise. You can see a very clear descending channel right here. The good thing, though, is we have support below us, 585 down to about 576. So if we can find a base of support and reset this into a daily uptrend, that will be the end of this weekly downtrending consolidation. And then we can talk about the possibility of resetting into a weekly uptrend and moving on to the all-time highs. But the bulls still have a decent amount of work to do. I'll remind you, we have a gap that was put in forth by the CPI release, of course. And if we fill that gap and come into support, that could be the opportunity where you fill the gap and then try to manifest a little bit of a rally. So essentially what I'm saying is I will be waiting for further declines on the SPY to go shopping for my favorite names. I'm not in the business. I've told you guys this in the past few weeks, right? I'm looking to buy down here, the bottom end of the range, into support, into the channel, into hourly oversold conditions when we get them. And then when we come up here, am I looking to buy? No, guys, this is when we take a little bit off until they prove to us that they have the daily uptrend back. I'm not going to overcommit to any sizable positions. Moving into the analysis of the overall broad market, right? We are still in a fear-based environment right now. Market momentum is still at extreme fear reads. Stock price strength, net new highs and lows on the New York Stock Exchange. You can see we have been ticking up, and this is largely because over the past 1 week of time, look, the heat map, big tech has largely been down, but the rest of the market is coming back. So this number right here is improving, but still arguably at the lows that we've had in the last year of trading. And stock price breadth as well. We have been coming up, as I showed you guys just earlier. We have been coming up in terms of the breadth. That is true, but still arguably at some of the lowest points we've had over the last year of trading as a whole. So still in a fear-based environment for the market overall. And I'll remind you of the seasonality for the S&P, guys. January, traditionally bumpy, and then February also traditionally bumpy. Only really towards the end of the March session do we really start getting that pronounced rally through the spring, and then you get that famous sentence, sell in May and go away. So I do still think we have a rally coming in the markets, guys, but January, especially the end of January with the remaining volatility catalysts that we have, right? We have Trump, we have big tech earnings as well, we have a final PCE read the last week of January, and we have Jerome Powell with the Federal Reserve possibly coming in with a pause. We know that the probabilities for the pause right now are about 97.3%. So that is going to be the expectation. So still, we are through a number of early volatility catalysts, but there are still some big ones on the horizon for the next 2 weeks. So once again, should be a fairly volatile month. Moving on to the Qs right now, the Qs down about 0.7. Same analysis as the SPY, right? The trend is your friend. And the trend right now, for all intents and purposes, let's just be honest, right? It is down. It is clear as day. Downtrending channel. And trying to establish a base of support. The bounces are always nice, guys, but if they cannot confirm the daily trend change, it is only that, a very nice bounce with a lack of follow through. So we will see if they can protect this area. They're coming into it now, 510. If we break 510, you'll be filling the CPI gap, and you may just be heading once again towards the lower end of the channel, culminating in the same support zone that acted as defense on the Monday session, which is arguably 500 down to about 495. Same concept on the Qs. How am I looking to play this? I'm waiting for the dips into oversold conditions on the hourly timeframes, as you can see right here, waiting for the bottom end of the channel to line up with a support level, buying the dip here, and then when you have a little bit of a rip, I am selling pretty much everything at a profit until the bulls prove to us that they have the daily uptrends. I'm not going to be in the business of holding any positions that I acquire at oversold lows. So hopefully you guys have learned a thing or two about trying to trade these very choppy and very volatile markets. But all in all, the Q's still in a daily downtrend and still in a weekly downtrend as well. So we will see eventually when they do get the daily uptrend, then we can talk about their capacity to reset this into a new weekly uptrend and proceed to a possible rally into the spring times of the market. Now moving into the XLF ETF right here, well, XLF was bolstered again by some very favorable bank earnings. I know Bank of America was down today. They had very good numbers. We'll cover them tomorrow, but all you guys need to see is they beat on EPS by a very nice margin, and they also beat on revenue too, and the guidance was very good. They said the economy was strong and the consumer was strong. We'll cover them more tomorrow, but a lot of this earnings move from today was probably priced in yesterday with the big bank rally, and Morgan Stanley as well, another investment bank, obviously up 4% on the day. Their guidance was good. Health of the institutional investors was good. More clients, more deals, all that good stuff that we talked about yesterday. We'll do a deeper dive tomorrow, of course, but I wanted to show you where the strength was coming from. Overall, though, even Visa and MasterCard participating, I was kind of waiting for Visa and MasterCard to get a little bit lower. If MasterCard could have dipped a little bit lower, it would have been such a juicy buying opportunity, but with financials earnings, they've kind of recaptured all those losses. So unfortunately, not the best trade opportunities right now, in my opinion. They would have been so juicy down here around the 200 EMA, but sometimes, guys, sometimes the trades just don't come to your levels, and that is life. But all in all, financials index looking very strong, one of the stronger ones. This is an engulfing move. So this is why you see the daily trends are very important. Daily downtrend until you get the engulfing move. If you notice on the SPY, no engulfing move, 100+% of a decline, right? Engulfing move creates a ton of space here off the lows. Anything above 47 looking for a higher low for further trend continuation. Most relevant support is going to be these guys right here and all the moving averages. So if we come back down, fill the CPI and earnings gap, could find a base of support, go for the daily trend change, and put an end to this weekly downtrending cycle. The candle is looking very good right now, but you still do need that last level of confirmation from the bulls. Could be some interesting trades for financials here off of this retest location, breakout, retest, and possibly rally. Could be an interesting location if you want to position for any trades. Moving into healthcare right now. So healthcare, despite UNH's decline, you can see the entire sector didn't do too bad. A lot of names were up. I know my big head was in the way, my bad. Just take my word for it, I guess. So daily uptrend is still, underway. We haven't really lost any levels. We'll see how high they can get, but overall, reacting nicely from the support zone, 140 down to about 139. But we know the context has always been this big weekly downtrend on this index right here. And although the bounce has been 4 weeks in motion, the bounce size is only about 50%. 50% retracement size is good, but it doesn't give the bulls the most favorable odds of setting the higher low and getting the weekly uptrend back. As a matter of fact, it is roughly 50% probability of the recapture and 50% probability of the flush and retest of the lows. As of right now, it's not looking too bad as this daily uptrend continues. A hope for me is that we at least get up maybe to about 144. I'll put the fibs back on there so you understand what I mean, and I'll kind of blow this chart up a little bit. If you can recapture 142 to about 144, that would be a 618 retracement, or a 782 would be a very nice move and would almost guarantee the bulls' capacity to have a very good chance at resetting this into a weekly uptrend and putting an end to this big 4 monthly consolidation that we've been in for the last 4 months. Moving into semiconductors right now. So semiconductors had a great start to the day and then pretty much faded the rally. This is not the first time. Nobody should be surprised. They've literally been doing this for 3 months worth of time. It will not last forever, guys. You can only get so many of these earnings beats and raises in guidance that we've seen from almost all of these companies over the past quarter and a bit before, the fundamentals start catching up. People start realizing that it is going to be an AI cycle boom, especially for chips in 2025. You finally break out and rally, but as of right now, we will have to wait a little bit longer. Still somewhat directionless, trapped in this resistance range, 260 down to 248, and below support is going to be 232 down to about 218. Same concept as always, guys. I'm looking for the pullbacks, and then on the pullbacks, I'll be looking to write short puts on my favorite companies, not on SMH, but if this was a stock, this is how I'm playing it, right? If it comes down here, we're writing below there. Which companies am I choosing to write puts on? The best ones of the bunch. TSMC, AVGO when it comes down a little bit, and NVIDIA are some of my favorites that I'm targeting right now. So as of right now, still trendless. I will remind you what we're looking for here is a weekly candle close above 260. Lets you know that the bulls have their butts in gear, possibly looking to gain a level, retest this as support, and then run. If they do this breakout retest here, guys, this will be a very high probability trade. But as of right now, still trapped in a range. Moving on to the Russell. The Russell not doing too bad today, 0.2% to the upside, and still benefiting from the engulfing move as a result of CPI and bank earnings. So it looks good, although it was a daily downtrend. They have now engulfed, creating a lot of space. Anything above 214, going to be looking for a daily higher low for possible further trend, or rather trend change to the bulls. If we give it all back, you guys know where we're going. We're just retesting these lows. 217 down to about 207 is the larger support. Prior resistance from 2020 and 2021, and now it will be acting acting as support from the bulls. So a lot of work left on the table. The bounce is nice, but need to get the daily uptrend, and overhead resistance is right there, 225 now up to about 232. This one will do better and better as there's more pressure lifted off of the longer term yields, 10 and 20 year. And so far the yields have been moving nicely today as well. We'll take a look at that in just a short moment. Moving on to the Dow Jones. Dow Jones, similar aspect as financials. Nice engulfing move. It was a daily downtrend for a very long time, as a matter of fact. And now we have an engulfing move, creating a lot of space, right? Anything pretty much above 41.9, just looking for a daily higher low for further trend continuation. And now that we're back above, we will be able to use this zone as support. Once again, that is 42.5 down to about that same 41.9. Not looking too bad there at all. Weekly also is looking like an engulfing move too. So if they can push a little bit higher, we get more weekly engulfing, gives the bulls a very good chance of resetting this into a weekly uptrend and finally putting an end to a little bit of very much healthy monthly consolidation. So we will take this one day at a time, but so far the Dow Jones gaining a level, creating some space above support, but all is not done, guys. A few volatility catalysts in the market the next few weeks, we can be right back down here. So although bounces are nice, guys, they mean absolutely nothing unless we confirm the trend change and move into some higher time frame bullishness as well. That is the key that we're missing right now. In terms of the 10 and 20 year yields, well, they've been coming down over the last 2 days since CPI, and this is a big engulfing move to the downside. This is what you want to see, not these little one-day events, stuff like that, right? Where they just get bought, big day down, they just get bid back up. So we will see now. The bears have a good chance at setting up for a lower high into lower low daily downtrend conversion. And if my Picasso drawing is correct, this would be a head and shoulders if they do follow that pattern. So all in all, not looking the worst. 1 week of downside is not enough to say that we are through the uncertainty for the year. Of course, they came up for a reason. They came up because of uncertainty surrounding Trump's tariff policies and what the possible implication will be on the end consumer. Obviously, that's going to take a long time to play out, guys. Trump comes into office next Monday. Thereafter, they have to derive which tariffs they want to do. Now, he probably has a pretty good idea, but then you actually have to put the tariffs on. You have to wait for other countries for rebuttals, then come to the negotiation table, negotiate final tariffs and whatnot. And then by the time you get those price increases coming into the economy, because a lot of these companies, because of the tariff implications, a lot of these companies have built out a lot of inventory over the past month. So by the time they liquidate all the old inventory at the old prices and put the new prices, and it starts affecting consumers, you're talking about that won't be seen for the next at least 6 to 9 months. So all these yields right now are pure speculation. But obviously the market is a forward-looking vehicle. It tries to price that in right away. That being said, not looking the worst here, guys, on the 10 and 20-year yields, similar patterns. And as I was saying, if we are trying to buy the lows on bonds, now is a decent time to enter. Yes, we do not have the daily uptrend confirmation, so we're trading with a lack of confirmation, but the CPI provided a very big catalyst that showed us that the real data for the consumer now is not as bad as people are expecting, and also that the economy is on strong footing. We heard that from the banks. We also saw it in the jobs reports as of last week. So if we are looking to call the bluff on the yields, right, now is possibly the time, but we have to put a stop loss down below here, below 84.92, because we are still technically in a downtrend, and this still is technically looking for a lower high into retest the lows, unless the bulls prove it to us that they want this back and want to start making some progress on this weekly time frame as well. So I am also looking for an entry here for TMF in terms of the 3 times leverage trade for a little bit of a swing trade here, guys, with some call options. But I'll let you know, my call options are going to be pretty much December of 2026. Short term is going to be a little bit bumpy, guys, but I do think that by the end of the year, yields have a very good chance of being at least lower than they are right now. And that is the take on yields. Overall, let's take a brief look at crypto, because crypto didn't have a bad day today. Bitcoin came right back down into the 97K range, but did close above 100K. So not that bad, guys. We are currently still trying to find some daily higher lows to set the daily uptrends. We will see if they can get them, and still battling with overhead resistance, which ends at about 101. You can see very clearly this area has been a problem for the bulls. If we do a close above, it brings up the similar concept as they try to do back here, right? Breakout, retest, and possibly run. This retest is what you want, because if you're longing here into resistance without the confirmation, sometimes you can just get beat back down. I'm not the one calling this. It happens all the time, right? We have to Sometimes it breaks out, but a lot of the times it just traps people and comes back down. So trading without confirmation, guys, never the best idea. But as a whole, Bitcoin does not look bad. The weekly has just been sideways consolidation pretty much. The higher lows are set. Can go for the weekly uptrend continuation right now, but still being faced with that daily overhead resistance. We will see whether or not we can break out. But with CPI yesterday and the drop in yields, it is kind of pointing and hinting to a more risk on narrative in the near term future. So Bitcoin is still the lead. You can see Ethereum dropped a lot more than Bitcoin today. And as a result, Bitcoin dominance still is not really flushing much to the downside. I'll remind you, if you want to see ETH and the other altcoins in this list start outperforming Bitcoin, you need to start seeing some progressive declines in dominance. That does not mean Bitcoin needs to go down. It just means that Bitcoin either needs to go down, flat, or up less violently than the rest of altcoins. As of right now, Ethereum not looking the worst, but still not looking as good as Bitcoin. So I am positioning for the altcoins. Could see a daily uptrend recapture for Ethereum. Not only Ethereum, but even some of the bigger ones as well, like Solana and stuff like that, right? They have been arguably very weak, trying to recapture the weekly uptrends. They don't look too bad, but we just have not seen the same amount of momentum that we did after the election cycle, right? But it's coming. You can see they're building bases of support, and the altcoin rally may just be coming here sometime over the next 30 to 60 days. So I'm buying into these progressively and slowly, and that's probably the more prudent way to do it. Moving into Apple right now, moving into big tech. So Apple down about 4.04%. What exactly happened today, guys? Well, here you go. Apple shares fall 3% after losing the top spot in the Chinese market. So this was pretty much saying that a few companies are now ahead of Apple in terms of the market share that they have. Let me see if I can find you guys some numbers real quick. Let's see if they can come here. No, they're not there. Give me a quick second, guys. So in terms of the headlines for Apple, right? So comprising 17% of all shipments, Vivo dominated the market in China, 49.3 million devices. 46 million units was Huawei, and only 42.9 million shipments was Apple, 17% drop from 2023. So Apple came in third as domestic flagship smartphone competition grew. So there you go, guys. That is one of the reasons, but this is not new news, guys. They have been hitting Apple with these headlines for arguably the last 5-6 quarters. Now this one, another one again. So that is the reason why Apple was having a 4% decline in iPhones, over the course of, or rather a 4% decline on the stock price because of that news on the iPhones. All in all, guys, we will see. Apple has earnings on the Thursday, January 30th. This was a concern last cycle for earnings too. We will see what Apple has to say about it. Since this was an independent research report from an external firm, I'm going to wait to see Apple's numbers myself. But this is why I was saying, guys, when you have a company such as Apple that is at a very rich valuation right now with flat revenue, if you guys don't know, Apple's revenue has been largely flat. iPhone sales have been largely flat as well for arguably the past 4 years at this point. Look at EPS, flat EPS, and revenue as well, arguably flat for the last 4 years worth of time. So when you have a company that for the last 4 years has been bolstering its share price largely with buybacks, let's be honest here, largely with buybacks, because it's not coming from top line revenue growth, and it's definitely not coming from EPS growth either, right? So that being said, when you have a company that has a very high multiple and very flat revenue expansion, any of these news catalysts are going to push the stock a very large fashion to the downside. And that's why I was saying up here, probably not the best case scenario to be chasing Apple FOMO when it was trading at a 3.5 peg. Even here at a 3 peg, guys, it is rich. That being said, weekly, still in a weekly uptrend, but look at all this loss of momentum. At this point, we've now flushed through the previous resistance level, which was support. That was 237 down to about 230. Now we are definitely, in my opinion, going to the lower end of support, which we've had arguably since the month of July, except for the Japanese carry trade unwind, of course, and that is going to be between 225 and roughly 215. I can extend this box a little bit, my bad. This is 225 to 215, 10-point range, and that also includes a nice little retest of the 200-day EMA. Apple almost daily oversold. If we come down here hard, touch the 200 EMA, have a bunch of support, guys, and daily oversold, that is confluence. It could be a decent opportunity for a bounce, but keep in mind, where is going to be the bounce highs? Probably to this resistance range, 225 to 220, right? At that point. So coming in oversold, nice little bounce trade, but I'll remind you the context. It is a daily downtrend. So even if you do come down hard here, when you look for the bounce, guys, are you looking for this? No, you are just looking for a lower high, and then it's up to the bulls to reset into a daily uptrend. That can take some time, but if you're looking for an initial bounce trade, there could be one down here. Just take a look, 200 EMA at 220 and the daily oversold condition. So keep that in mind for Apple. Not looking the best right now, and the valuation is also not looking the best, and they do have earnings coming up in 2 short weeks of time. So Apple, for me, it is a little bit of a swing trade, but anything more than that, I think we have to be very cautious and possibly wait for earnings. So there is a swing trade here before earnings, but I wouldn't really keep anything into earnings unless, of course, you are leaning very bullish for the company in the future. Then, of course, you are free to do whatever you want. Moving into AMD right now. So AMD, again, 1.27% to the downside. Seems as though even when AMD has green days, they're not that green. They just have like, for every green day, there's like 5,000 red days, right? I know that's how it feels because that's how it's literally been since the month of October for the last 3 months. 4 months, arguably, and it does start to weigh on people. That being said, you cannot forget, if you are an AMD bull, you cannot forget the fundamental thesis of the company, right? Fundamental thesis is a very cheap valuation right now. Very good revenue and EPS growth. We're not saying it's going to be the next NVIDIA. We're just saying that they're going to be number 2, as they've always been, arguably, to NVIDIA in everything they do. EPS, look at this EPS expansion through 27 and revenue expansion through 2027 as well. Going to be some of the best expansionary phases the company has ever seen in its history. So although the short-term price action sucks, for lack of a better word, it does suck. Let's just be honest, right? Say it how it is. The thesis, fundamentally wise, for the company does remain, even though you have analyst downgrades and all that stuff, guys. I do still think that this stock, when it does get moving, possibly off of good earnings, it will reprice somewhat aggressively to the upside. That being said, no sign of that right now as the daily downtrend is maintained, right? The flush, lower high possibly, we have lost the hourly, almost losing the hourly timeframes. If you lose the hourly timeframes, guys, unfortunately, the daily bounce is done and you're possibly revisiting these lows. Take a look at the size of the bounce. The size of the bounce was only 38.2%, guys. So eventually, after one of these legs down, if you want to see the bulls recover, what you need to see is a healthy 60-70% bounce, engulfing move, reset the daily uptrend, then and only then you will find your weekly lows. But as of right now, they are not set, arguably still a weekly downtrend. And if we do head lower, we're coming down here, 112, 113, down to about $100. This is where I really want to start buying AMD a little bit more aggressively. But as of right now, the chart remains weak. However, the chart remains weak, but the thesis fundamentally still remains strong. Moving on to Amazon. So Amazon as well, down about 1.2% from the highs today. And Amazon, similar to the SPY, it should be clear as day. This is a very clear downtrending channel for the stock right now. Amazon still has very strong fundamentals, but the price action has been in a daily downtrend. Lower high being set today. How do you know it's set? Loss of the hourly time frame, right? So when you lose these hourly uptrends, you should know that the daily move higher is done and you possibly are looking to retest lower. Where can we maybe go? 215 down to about 208 is the next short-term area of support. The bigger one, of course, comes largely at the $200 mark down there. That will be a retest of the 26 EMA. And in the context of a bull market, usually Amazon does come down, test the 26 EMA sometimes. Usually whenever it does, this was the Japanese carry trade unwind, of course, right? When it does, usually a decent buying opportunity. And in that respect, Amazon would be down 12% from the all-time highs. So Amazon, I'm not opposed to buying a little bit down here, but my largest area where I truly want to go heavy on the stock has to be 205 down to 200. I would love to buy more shares of the company down there. Fundamentals still looking strong. Valuation at 220 is still very nice at a 1.65 peg, and Amazon should be having one of their most profitable years ever. Yes, I said profitable because Amazon has never been a company that goes for bottom line net margins, but this time they are. So curious to see what they have in store for us for 2025. Still one of my favorite picks for the entire year of all the Mag 7 names. Moving on to Google, another one of my favorite picks for the entire Mag 7 list for the entire year. Google right now still trapped in a sideways range. Of course, we have overhead resistance, 200 psychological, and below us support is about 191 down to about 188. It's not the most solid level. They've been establishing it a little bit more in the last 3-4 weeks of trade. It is the previous all-time highs essentially, and the short-term moving averages are a confluence there too. So sideways range, kind of like semiconductors right now. If we retest the lows, we'll be curious to see if they can hold. But if we flush, that would be daily downtrend. That would be also weekly consolidation and again, weekly downtrend, and we might be heading towards my preferred area for Google, which is the low to mid 180s. If I can find Google again, back down here, mid 180s, it is a buy, 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 buy for me. So I'm not too sure if they're going to be able to really break out much before earnings. Earnings coming up in roughly 3 weeks. They're kind of all alone the first week of February. All of big tech reports the last week of Jan. They're pretty much all alone the first week of February. So we'll see. Can they break out before earnings or will they break down? I'm not too sure. One thing is for sure, though, if they do come down there, I'm very interested in buying. But all the way up here, guys, before earnings, maybe not the best consideration. I think they're going to have a very good earnings, but if I can see some declines, that is where I get more interested. Moving on to Meta right now. Give me a very brief moment. And Meta's down about 0.94%. Meta as well, kind of a lack of direction. You can argue that it's a daily uptrend right now, looking for the daily higher low for further trend increase, right? But trapped between overhead resistance and trapped within below support as well, which is 597 down to about 582. In the event we retest these lows and big tech remains weak a little bit, we'll see how we respond to this area, but you cannot lose it. If you lose it, that would be without setting new highs. It would be a weekly downtrend, and then at that point, we may just be heading into a little bit of monthly consolidation. Meta has been overbought on the monthly for a little bit, and we are a little bit extended from the 12 EMA as well. So if Meta does choose to consolidate for XYZ reason, who knows, right? And comes back down to 550, 540, that'll be lining up with the 12 EMA touch and also lining up with arguably my favorite area for this stock, which is roughly 550 down to about 530. This area down there will be a test of the 50 EMA as well. I would love to buy Meta down here. I'm not saying it's going to go there, but if we break down below, that's probably where it is going as a next stop. But as of right now, no signs of that. The bulls are still in control. They're looking to break out from the all-time highs, but we'll see if they can protect the support. So as of right now, Meta, kind of a no trade environment for me. It's a little bit too high for me to go for the continuation right away prior to their earnings. But if they do dip before earnings, that may be a play that I'm willing to take. Moving on to Microsoft as well, down about 0.41%. They were actually higher on the morning and faded. They were green for a majority of the day, but take a look. The last hour of trading really sent them to the lows with that last 5-minute candle. So that being said, guys, still a daily downtrend for Microsoft, no secret there. But the daily bounce, look at this daily bounce size, guys. This is a nice bounce in terms of a daily time frame, right? 78% bounce. So it gives the bulls a very good opportunity to reset some higher lows and go for a potential daily trend change. Anything pretty much above 411 would get that done. Why are we rejecting here? Well, quite simply, we've gotten rejected here so many times. It should not be anything new for you guys, excuse me. 435 down to about 425 at the lows. If we do come down a little bit lower, I'm still a big fan of writing short puts if you have the capital on Microsoft 410 and lower towards our bottom end of support. And I do still think Microsoft is going to have a fantastic year, sideways accumulation for a year of time at this point, while improving their revenue, while improving free cash flow, while improving margins, and while improving EPS. When you are improving every aspect of your business and you are going sideways, that is what's known as an accumulation phase, and usually can be followed, especially since we have a bullish bias because they're improving fundamentals, can be followed with a big repricing to the upside. The analyst price target average for 2025, I'll remind you, is 510. So this one as well, one of my favorite trades for 2025. Do with that what you will. Moving on to Netflix now, down about 0.69%. Not the worst day for Netflix, but not the best either. We know the context has been in a daily downtrend. Lower high is set with the high of today. Why? Well, because simply we are now losing the hourly time, or now losing the hourly trends, right? Flushing of the lows. So now might be setting up for the lower low flush. In that case, we're going to move lower and lower and head into earnings, which is next Tuesday. So very tough to derive where we're going to go by next Tuesday. I pulled this up yesterday, guys, in terms of the expected move for Netflix is about roughly 7.5% for the Tuesday move, right? So let's say Netflix does not move until 7.5% until their earnings on Tuesday. Well, 7.5% to the downside would send us right into our support area, arguably 775, 750 down there, and 7% to the upside is going to be, testing very close to the all-time highs. So very tough to derive where we're going to go into earnings. I think earnings are going to be fantastic, but you guys know what Wall Street does sometimes. Earnings can be very good, and somehow the stock can just go down. It's done it several times in the past, right? So that being said, let's have a look. In terms of the weekly, if we do pull back to the 26 EMA After those earnings, I would be a fan of buying. That'll be really closer to about 750, and that would be a top to bottom decline on Netflix of roughly anywhere between 17 and 20%, depending on if they go down. All in all, not the worst opportunity if we do come back, but right now, taking this trade before earnings is somewhat of a gamble. The valuation is not too bad. We did it at 900. It was about a 2 peg. Right now, they're under that. Not too bad, but I wouldn't say the company is cheap per se. Still one of my favorite stocks to maintain for a long-term portfolio, though. Moving into NVIDIA right now, NVIDIA down about 2% on the day, and still trendless, directionless, some pretty much like the underlying index SMH, right? What we need to pay special attention to is this level right here. Let's call it about 130, right? If you break and close below 130, that is a clear daily downtrend, but you do have a support level 130 down about 125. Break both of those, daily downtrend, that as well is going to be, unfortunately, a weekly downtrend as well. And then you have to rely on these guys down here, 120 to 115. This 120 to 115 is actually where I want to buy more NVIDIA. I've been buying a little bit of NVIDIA progressively in this location, but I've been going a bit light. Where I actually want to go heavy is down here, 120 to 115. That would be a top to bottom decline of about 25%. And usually when NVIDIA goes down, that's about how much they go down top to bottom. 25%. You can see they did it here in the month of March as well, 20%. And if you go to the fall of 2023, top to bottom declines overall were roughly 25% as well. NVIDIA should be having a fantastic year. The guidance is great. The business is doing great. Their products are fantastic. I'm not nervous about them at all, but we know that semiconductors have just been out of favor because the one thing that's holding them back, arguably, in my opinion, guys, is the constant, incessant China export restriction headlines, right? I think they'll be able to move through those, but that's pretty much, whenever we get a good headline, it gets beaten down by those China headlines as well. So still a very decent, attractive opportunity to constantly place short puts under the market. Head to the lows, we write short puts down there, bounces back up, we close them at a profit, rinse, repeat. I've been literally doing this for the past 3 months. Moving on to Tesla right now, Tesla down about 3.36%. Not the worst day for Tesla, but also giving back a little bit of the 8% gains that we had yesterday's trade too, right? So still in the context of a new daily uptrend. Now at this point, since we have lost a little bit of momentum here, we will see, can they keep it up and just maintain this daily leg higher? If we lose the hourly, though, this would be a flush of today's low. If we lose this hourly time frame, that unfortunately is the end of the daily move higher, and we are moving into daily consolidation, a decent amount of space, anything above 380, looking for a daily higher low for further trend continuation, and this whole area is support 410 down to about 375. So the bulls still have a very good chance for the expansion. The weekly also is still, technically speaking, in a weekly uptrend with the lows being set at 375 roughly, and we still are holding the previous all-time highs, which were resistance, now acting as the breakout, retest area, 12 EMA there as well. So Tesla's not looking all that bad. Same concept, guys. When Tesla has bad days, I'm writing short puts under the market all the way down here. And when it has pops, we are just selling those for profits. Not looking too bad, guys, but Tesla might be a little bit bumpy, especially before its earnings 29th of January. So what I'm saying essentially is we probably will not see Tesla have a massive rally or a massive flush probably before earnings, right? Moving on to Palantir now. Palantir up about 1.61%. But pay special attention, guys. Where are we coming into? Coming into resistance. Daily downtrend into resistance, 70 up to about $72. And you can see when we came up into it, the bears kind of took over, right? We pulled into it hard early on in the morning and then just got rejected. Now hourly downtrend. You can make an argument that that is the top of the daily move, and we may just now be looking for lower, right? So that being said, how high was the bounce? The bounce was approximately, if you include the wick, which I will, about 50%, barely 50%. So the probabilities of the bulls recapturing the daily uptrend or the bears flushing to the lows are 50-50 right now. Very hard to tell, but this is a clear daily downtrend, and I would not be surprised if we do move lower to a bigger area of support, which is arguably the $60 level. So Palantir overall, guys, the bounce was nice, but until you get the confirmation of a new daily uptrend, you cannot say that this move is done, and you cannot say that weekly consolidation is done either. The next stop, as I said, $60. Where I want to buy this one is if we come down hard into $60. As a whole, I'll probably be looking for writing short puts, $55 down to $50, which is just where I want to personally buy the stock. I'm not saying it will go down there. I'm just saying if it comes down to 60, I'll be writing down there. If they want to fill me, perfect. If they don't want to, I'll just collect premium on the sidelines. I really don't mind. I'm a long-term shareholder. I have like 1,000 shares still, guys, at like $11.80. All of this right now is just trading for me. So take from that what you will, but Palantir not looking as strong. They do have earnings coming in the 3rd of February in about 3 weeks worth of time. So should be an interesting period of time before then. If they do choose to consolidate before then, might be a good buying opportunity to write some short puts down there. And now lastly, SOFI. So SOFI was one of the best bounces across all of these names combined, guys, other than maybe TSM, of course, right? One of the best bounces that we've had in the most recent few days. This is because of a combination of two-factor bank earnings, and SOFI is a bank. And number two, of course, the resurgence in the risk on trade, as we've been seeing several of the momentum names come back a little bit from the lows. That being said, new daily uptrend is now in motion for SOFI. Arguably equal lows, right? They did flush a little bit, but I would argue by saying they're kind of equal lows. I will give it to the bulls. New daily uptrend is set. Now we're looking for the higher low. At this point, anything above 1362, looking for the higher low to then reset into a new leg for the daily uptrend. That is if they don't just continue all the way into resistance, which currently is about $17.10. SOFI is looking very good. We also have a MACD cross below us, not looking too bad at all. And on the weekly time frame, look at this weekly candle, guys. Big engulfing move, big engulfing move right there. Weekly downtrend was clear as day. Now in one clean shot, we've recaptured arguably, what, 90% of this most recent weekly leg down, looking very good. We're now back above the key area of congestion, this whole roughly $16 down to roughly $14 range that the bulls were looking to protect. They did a fantastic job of protecting that, and now might be looking to embark on that one leg higher. Look at the monthly candle, guys. Big doji formation. Now the month still has a lot of runway left in it, but this would be a very nice setup to go hit that $18-20 price target that even I have on the stock and other analysts do as well. So right now, arguably not the best time to YOLO, right? We have to be buying the dips. I was buying the dips. If you didn't buy the dips and now you're feeling FOMO, maybe just use this as a learning experience to practice, waiting for some daily higher lows. Make the attempt there, because then you have a closer stop loss and you have more upside appreciation. Buying the top end of these rallies, guys, can work out sometimes, but more often than not, you will get burned and you won't get the best pricing. That's if you're just trading with the technicals. If you're just trading this, holding this with a long-term portfolio, then obviously you don't need to listen to any of that. SOFI still looks very good, and I do think this one can have a very good chance of hitting $18 to $20 over the next roughly 3 to 6 months. It may be sooner. I'm just saying the next 3 to 6 months, a very high probability of that happening, especially if the economy does well and the momentum and the risk on trades get back into a little bit more of a favorable environment. And that is pretty much everything for today's analysis, guys. Tomorrow I'll be doing the full portfolio rundown. We'll be going over another different few types of momentum trades as well. We'll have a bit more time in the Friday recap video. But so far, that is it for today. Hopefully you guys enjoyed. If you did, consider dropping a like on the video. Would appreciate it for the growth of the channel. Now also consider subscribing to the channel if you're new. Almost 5,000 subscribers, guys. I need your help to get me up to 5,000 subscribers. I know it doesn't sound like much when other creators have 1 million subscribers, but it means a lot to me. So if you guys could help me out there, would really appreciate it if you enjoy this type of content. And lastly, if you have any questions, guys, I'll be answering a ton of questions tonight. If you have any questions on stocks, options, my strategy, the market landscape right now, please let me know and I'll be glad to answer you. Usually I do answer within the first 1 to 2 days. So thank you very much for your patience. And lastly, guys, if you want access to all the trades that we do in the private trading group in the Discord, the link to the Discord is always down below in the description. That gives you access to all of my trades in the real time. These are all the trades since the inception of the Discord. The green check marks are wins. The little red circles are little losses. So these are all the trades since the inception of the Discord overall. That comes with the wheel trades, the short-term call option trades, the leap call option trades, the share swing trades, the call debit spreads, the put credit spreads. We do all types of account strategies, whether it's options or shares, whether you have a big, small, medium account, it does not matter. All of these trades are scalable both up and to the downside. We also do private morning live streams Monday through Friday, every single day for about 2 hours during the open, and where you also see me live trading and you can ask me all of your stocks that you want me to look at and stuff like that. And obviously too, you get my trade setups for trades that are not yet live but could be live. And you can chat with me all day as well, all throughout the day. Ask me your questions on your stocks, your options. You can ask anybody. I answer very, very quickly throughout the day. And also, things that I don't even mention, right? Sometimes private videos, trading strategies, and psychology videos that I do not put on YouTube. Very intermediate or advanced stuff, especially for options. And also, guys, I share all my TradingView watch lists, right? All of these watch lists, the options watch list for the wheel, a couple of high conviction, high value lists as well. All this list combined that's taken me a while to kind of compile, and the TradingView charts as well. I share my chart setups, and it also comes with all the annotations. So all the annotations that you see me do, every single earnings that get updated, you have access to all of that. I share all my watch lists as well, and a couple other key different things too. So if any of that interests you guys, link to Discord is always down below in the description. Hopefully I see you in there soon if it's something that interests you as well. And if not, I guess I'll see you back on the channel, guys. That's it for me. Take care. I'll see you tomorrow after the close. Let's wrap up the week strong, guys. We've had some very good gains in the Discord, and myself personally, I can't wait to show them to you tomorrow. Take care. Have a good day tomorrow. I'm out. Peace.